Hello, it's Jeffrey Christian. It's about 11:15 on Tuesday morning, August 4th. New York City is being battered by the outer edges of a hurricane right now. It's a good time to be talking about gold. The gold price has actually risen sharply in the last half hour, and it's now up well over $2,000 again. There has been a struggle going on over the last several days between some people who think that a break above 2,000 could cause the price to rise sharply, and other people thinking that having seen the gold price rise about $120, $130 over the last 10 trading days, it's due for a little bit of a correction, at least on a temporary basis. We issued a trade recommendation yesterday through Goldex and Kitco, in which we were saying that we thought that the price would stay high in the long run, in the next several weeks and months, simply because of the tremendous amount of economic, political, and financial market uncertainty that is clouding the immediate future right now. And things are getting very weird economically and politically, to say the least. We have the arguments going on in Congress about the next round of stimulus to protect the economy from further deterioration. The economy is in bad shape despite some good numbers. The pandemic is worsening in the United States, and the government seems to be fighting among itself. So it is a precarious time. There's a great deal of uncertainty, and that's likely to keep the gold price relatively well supported. In addition to that, you do have some efforts by regulators, exchanges, banks, and brokerage houses in China to quell what they saw as a speculative excess buying over the last 2 weeks. That could have a little bit of a moderating pressure. And the roll of the August COMEX gold contract into the December contract is pretty much over. You're down to about 1.4 million ounces at the start of business yesterday in August, and you're well over 40 million ounces in open interest in the December contract. So in that kind of environment, our trade recommendation yesterday said that yes, the gold price could possibly see some lower prices over the next week or so, possibly 1960 for the December contract. A spike down to 1950 or 1930 could not be ruled out, but that we thought it would be pretty temporary and it'd be taken as a buying opportunity by bulls who do see the price going higher based on those exogenous economic and political factors. And, you know, we are less than 3 months away from an election now in the United States that's going to be hotly contested. I will say one other thing that's popped up this morning. There were some people speculating that central banks might buy silver because the gold-silver ratio was so high. Silver is not considered a reserve asset by the Bank for International Settlements, which decides what reserve assets are for central banks. So silver would not be usable as a reserve asset, and it wouldn't make sense for central banks to buy silver. So that seems to be something of a stalking horse by people trying to promote silver without really understanding central bank accounting procedures. We also issued the the market commentary that you see here on Monday, and that talked about gold, the dollar, and interest rates. We saw the dollar weaken a little bit, about 2.2% last week. And that prompted a lot of people to say, oh, the dollar is going to zero and the dollar is going to fall sharply. You can see from the charts here that while the dollar did weaken a little bit last week, it gained back about a third to a half of that yesterday, Friday and yesterday. But while the dollar did weaken a little bit on a short-term basis last week, the reality is that the dollar is very high by historical standards, and it's higher than it has been for most of the time, really since the global financial crisis. And if you take out the global financial crisis and its aftermath, you can go back to like 2003 to see an extended period of time where the dollar was less valuable in terms of its exchange rate or valuation than it is today. So the dollar is far from collapsing. That's not necessarily a problem for gold. Gold doesn't trade against the dollar. Gold trades against currencies. And what you see is that the dollar and gold often are reacting to the same third independent variables. So when you see the dollar rising, you might see the gold price rising if whatever is driving the dollar up is also driving gold prices higher. And it's not uncommon to see gold and the dollar rise or fall together. The statistical correlation of changes in real gold prices versus real exchange rates is about negative 34% in the half century of free gold prices. That means that 66% of the time the prices are either moving together, higher or lower, or they're not moving in any correlated fashion at all. So a higher gold price is not necessarily negative for gold, and a weaker gold price dollar is not necessarily stronger positive for gold either. What you're seeing right now is that the dollar actually has been relatively high over the last few weeks, and there's been some short-term profit taking. There is concern about the dysfunctionality of our economy and our government. There is some concern about what's going to happen between now and election day, and then after election day until the election is actually settled. There's a special task force that's been put together, bipartisan task force to prepare the population of the United States for the likelihood that there's going to be an extended period after the election when the election results are not really decided. So the dollar weakening, A, is not really all that important, and B, is not necessarily a strong positive for gold. That same market commentary, if I can scroll down here, has some commentary, very little, on U.S. Treasury interest rates and recent weakness that we've seen in interest rates in the United States 10-year notes and its lack of implication for gold too. So trade recommendation yesterday, market commentary on gold, the dollar, and interest rates yesterday. Gold market is continuing to pace as the world turns. This is about all I have to say today, and I'll talk to you the next time we post a commentary. Have a good week.